Hey, listeners of the ValueHunt podcast. Today, I'm really happy to be here with MikeDDKing, one of the, I would say, top investors in the microcap space. You can just go to MicroCap Club and check the ranking and see him on the top of the, I wouldn't say top, but top five. Yeah, hopefully today we'll learn more about what mental models help him become one of the best and really know more about Mike and his approach to investing. So yeah, Mike, how are you doing today?
Pretty good. How are you?
Yeah, I'm pretty excited. As I said, we were just talking before, and I think this will be a great conversation. So, um, I would say the first question I always ask my guests is, who is Michael? So, how do you
Yeah.
define yourself?
Yeah. First of all, you can call me Mike. Um,
Okay.
I'm a full-time private investor, mostly in microcaps. But sometimes I'll go outside of microcaps when, like during the financial crisis, um, some larger companies became microcaps. Or maybe, so I guess, well, not necessarily microcaps, but large companies became smaller companies. And, there it made sense to break out of it. But 90+% of my investing is in microcaps. And I've been doing it full time since 2006. My educational background is in computer engineering, and I sort of fell off the wagon and got into investing. So my engineering work was mostly in the cellular field. I wrote software that went in cellular phones. Um, and so I'm married and I have 6 kids, and I live in the Chicago suburbs. So initially, I learned about investing from my father, who was a CPA, and he specialized in small banks, some of which were microcaps. And, and later on in his investing career, he dabbled more in microcaps. So, I followed him into investments when I got out of college, and I graduated in '89. I followed him into some investments. He would say, I'm buying stock in this company, and then I'd go and buy stock in that company. But then in 1999, I decided, well, I want to try this out and, pick out companies on my own. And so I accidentally started a new career. It wasn't my intention at that time, but that's what it eventually um, went into.
That's really cool. And one of the things I'm most curious about is actually your engineering background and how you pivoted to investing. You already gave us some flavor about it, but obviously I'm taking engineering too, so I guess I can resonate a bit with that. And for someone that really likes investing, could you give us your blueprint on how you did that?
Okay, well, first of all, so how has engineering impacted how I do things? So first of all, I'm very methodical. Um, so my initial edge, I didn't know it at the time, was that I knew how to gather information on the internet. Um, I was kind of early on, and there were not a lot of people that knew how to use the internet, and but I didn't know it at the time. Eventually I figured out that that was sort of my edge, but I didn't know it. I would like post ideas I had on the internet and like wait for people to find the research that I had done, and then slowly things would take off. So it wasn't like, I think in today's day and age, um, information travels a lot faster than it did back then. So you had more of an advantage of if you could find things early, it was more of an advantage than it was back then. Um, my edge is sort of also that like I know of a number of communities, mostly MicroCap Club, um, where there's a lot of idea flow on microcaps. So I can be looking at a lot of different things at the same time. Also, the interesting thing now is, so I said I had a degree in computer engineering. So back in the late '80s, I took a class in artificial intelligence, and it's kind of at the time,
Wow.
I learned about it, And I so I remember I wrote a project on an IBM PC XT, not actually an IBM, but of that caliber. So not even a 386.
Mm-hmm.
And it was to play the game Connect Four, and so the computer game could look like four moves, or I forget, like 4 or 5 moves ahead. And I did something to optimize it so it could so the processing power required is exponential as you look ahead. You know, if you go from like 4 moves to 5 moves, requires a lot more processing power. So
Yeah.
I did some sort of tricks to make it so that I could look ahead further without needing all that processing power. But anyway, I kind of like at the time was like, oh, this AI stuff is cool, but the computing power isn't there to like really be able to harness it. And ironically, now it's here. And so it's another place where understanding technology kind of gives me an edge over someone else, I suppose.
That's really interesting. I would say that's also kind of the Peter Lynch approach to investing, kind of using your background to apply to your investing style.
Right.
So that's really nice. And one of the main questions I got for you, obviously, knowing that you've had such a like good performance in the last decades, and knowing that your performance is public, basically for anyone to see, or at least the part you published on MicroCap Club. I'm curious to know how you think about performance, how you assess yourself, and how you deal with that feedback loop dilemma that every investor has to deal with, which is your inputs and outputs aren't really like closely tied in terms of timing. So yeah, I would like to hear your thoughts on that.
Yeah. Well, mostly, I try to think of myself relative to like performance of say like the Russell 2000, and
Mm.
if I'm beating that, I'm happy because and I don't have to be beating it like on a daily basis, but if on a yearly basis or a couple years basis I'm beating that, that's good enough for me. Um, so I don't know if that answers your question enough.
Yeah, I would say it does. One thing I would like to ask you as a follow up, I'm curious to know if you use some kind of strict hurdle rates on your investments. Like, do you try to really get a certain return when you invest in something, or is it more like touch and feel and see if that's really a good opportunity? And yeah, how you think more
Well,
specifically about that?
I guess I would say it kind of depends on the opportunity set that's in front of me and
Mm,
how I
okay.
feel about I'm not a market timer, but maybe how I feel about the market. Sometimes, you know, like, in the depths of the financial crisis, while it was hard to be like losing money, I wanted
Hmm.
to like more and more be fully invested because I knew that it, probably would come back. Um, so I have to like look at things, you know, like look at all the opportunities in front of me and pick the best ones, and then and considering diversification too,
Mm.
which I
Yeah, got it.
rarely go above 10% of my portfolio is probably about the most I do on a cost basis because I just think it's wise to diversify. While you can stack the decks for you by doing good research, research does not the outcomes may not match what you learn about the past. It's the old future performance or past performance is not an indicator of future performance. So
Mm. Yeah, I think that's interesting. And actually, I just recalled that maybe my audience doesn't really know you as well as I think I do, because obviously I researched a lot about you and saw all your past interviews. So they might not know that you are partners with Ian Cassel at the MicroCap Club, and so I would be curious to know, how did you guys met, and as a follow up, like how does your investment style differ compared to him? Like what are the main differences? Because I do know in the early days that he was really concentrated, and since you mentioned diversification, it's kind of it would be interesting to know what are the main
Yeah.
differences. So why don't you guide us through
Well,
that story?
yeah, yeah. Okay. So, a couple of things. First of all, just to be clear, I mean, Ian and I are good friends, but I'm no longer an owner of MicroCap Club. Um, but I'm
Okay.
still, an active member there. So I don't want to mislead anybody. Um,
Yeah.
how we got to know each other? Well, we, as it turned out, we were in several investments um, at the same time, and we kept running into each other. Like we'd find out we're on the same conference call, because he would ask a question, and I'd be like on the call, and I'd hear him talk. And then he started MicroCap Club, and invited me to come over as a member, and I did that, and then one thing led to another, and we became partners for a good period of time.
Hmm. Interesting. And so, like, how does your style differ when compared to his style, for example?
Um, I think I'd almost prefer to have this conversation with him here, but I'll do my best without
Okay.
it because I don't want to mislead what his style is. But I think in the beginning, so I've always been more interested in profitable companies than Ian is. I always like to see it be profitable or very near profitability and growing. Sometimes if it's just about to cross the line from unprofitable to profitable, that can be a great investment. But and he's more interested in earlier stage than that. Um, so I
Okay.
think that's but I think his style has changed a lot since I first met him. So we're probably more similar now than we once were. Or I'm sort of previously we're less similar than we are now.
Okay. Okay. Got it. Yeah. I think that's already paints some picture on how you think about investing. Um, and so I'm really interested in knowing what's your system, if you have one, for screening for ideas, because obviously there are a lot of microcaps out there, and it's really useful to have a good filter on what you care and what you look for. So yeah, what is your main filter when looking, for example, at SEC
Yeah.
filings or a new idea, for example?
So first of all, I wish I had the number on it, but I have research on hundreds of microcaps. I don't remember what the number of how many I have. So I have a standard format that I fill out. Uh, that showed, like, I look at least the last year of quarterly results, and usually the last couple of years, and I put it into a file, and I keep updating that file as time goes on. I don't update them all because sometimes I do research and I'm like, I'm not interested in this company anymore, and I never have a reason to go back, but I still have the file of But so I've got you know I keep lots of research notes, um, and then I'm scanning press releases and SEC filings on a daily basis to look for more. Plus, I also source a lot of ideas from other investors, at places like MicroCap Club, um, because
Mm.
uh, it's a lot to cover everything. you can't cover it all. So you have to try and, pick your spots.
Yeah, yeah. I think that's interesting because as a new, I would say, as a newbie to the microcap space, obviously the holy grail is to find your own original idea and really have a successful idea on your own. But I still think the old, I would say, checking and getting inspiration from other people and then doing your own due diligence and obviously doing your work, it's also really good to leverage the all the research that's out there, and you can still generate quite interesting returns
Yep.
from that. And one project that I'm launching, I would say, for next year is kind of getting more in touch with the CEOs of the companies, because obviously I'm always talking with investors, but it would be interesting to also know what's on the other side and how the CEOs think about their own businesses. And so I'm curious to know what's your general strategy for getting in touch with management teams, if you do that at all. So yeah, why don't you give us your experience on that?
Yeah, I uh, certainly do get in touch with CEOs. And the important thing, I think, when you contact a CEO is to do as much research as you can um, before, look at their website, read their SEC filings and stuff to figure out what they've said. And beyond that, the main reason for a call is learning more about, like, color maybe on how the business operates and what they fundamentally try to do, and try to, understand beyond what, you can learn from SEC filings and press releases. Certainly without
Mm.
getting into, you can do that without getting into stuff you shouldn't know, you know,
Yeah, yeah,
um,
exactly.
but, trying to understand beyond the, this press release said this, what does that maybe really mean? Or what does that, and what is their approach to, increasing revenue, or what, whatever they're trying to do. So you can kind of learn more about their style. Is probably a good way to
Okay.
put it.
Good, good. That's good. And sorry if I dig a bit deeper on this question, because I'm just trying to figure out how I can do this. So in practical terms, do you send them an email? Do you reach out to them on LinkedIn? Do you call? Do you do everything? Like how do you approach that?
Well, usually I just call them up and,
Mm-hmm.
try to get a hold of them. And sometimes it may, take a call or two. You might not get them for a shot, but usually I get them to call them back. In the past, you know, enough people knew who I was, being from MicroCap Club, that I think that gave me, sometimes it's hard to get the CEO to talk with you because they're busy
Mm-hmm.
people, and, they
Yeah.
don't have time to talk with everybody. But I think the fact that I was involved with MicroCap Club helped me to get those conversations started.
Mm. Nice, nice. um yeah, I think that's really interesting, and let's see how it goes, because I think it will be pretty cool to do that. um and yeah, one other thing I guess everyone wants to know when talking with a full-time microcap investor is, first of all, how did you really transition into that position of being able to, let's say, quit your job and do that full time? And second of all, like, how does your day look like? How do you structure things so it doesn't just like I would say, yeah, become complacent or really don't have any structure? So yeah, probably you could guide us through how you transition from having a regular 9 to 5 job to full-time investing, and then also how you structure things so it works out all right for you.
Yeah. Um, I think I told you how started with my dad got me involved and I started investing on my own.
Hmm.
And what happened is as things progressed, I was making more investing than I was in my day job. And so I was kind of like, okay, why am I, doing this day job? And the other thing is my day job required me to be on the phone. I was managing development around the world, and it was not the greatest for my family life. And so I decided that I was gonna one day I just decided I was gonna. Well, I don't think it wasn't just one day. It was a little, it took me a while to determine that I really wanted to do it. I just quit working full time and became self-employed. I remember
Mm.
my boss at the time was like, "Can't you do that part time on the side?" I'm like, "Dude, I've been doing that for like several years now. No, I can't do it on the side anymore."
Yeah, yeah. I think that says a lot of also how much value you added, because I guess if you were just a um, regular employee, he wouldn't even bother. So that's interesting. Um, and yeah, you also kind of mentioned you have 6 kids, and
Yep.
my parents at least say one kid it's a lot of work. So I'm guessing 6 kids it's like 6 times the work at least.
Yes.
So how did you juggle between having a full-time job, then also investing on the side and being like a father? I guess you also mentioned you quit your job because you, yeah, it wasn't great on the family side of things. But yeah, especially nowadays that people are having like children later and later in life, like
Yeah.
it would be interesting to know how you manage everything, I guess.
Well, I guess I can say it wasn't easy to manage everything. Uh, how what I did in the beginning when I was working full time and doing this is I was doing like research on the weekend, and I developed a network of. This was before MicroCap Club, and I developed a network of friends that I would communicate with, mostly over the internet and exchange ideas. And
Hmm.
so, you know, that's what I did to start with. Um, and eventually transitioned to doing this full time. Not sure I
Got
answered
it.
your
So
question though.
just want to make sure you leverage like the relationships you had to make it easier to kind
Yeah,
of manage
yeah.
everything, or okay. Okay, makes
Well, the thing
sense.
is like you get to over time, you get to get to know people, and you get to learn who like does things like similar to your style, and um, and they're good people to go to. If you think the same way, um,
Hmm.
it's good to be able to go to them and you know um, get their ideas, and that I would attend events. Well, not initially, but after a while, I started going to conferences, and there'd be people there that I know, and what's your best, start talking with them and understand what their best ideas are, and exchange ideas.
Okay, okay, got it. So just to go back to the question of the full-time microcap investor thing, uh, I would be curious to know how your day-to-day looks like how you structure
Sure.
your day to
Yeah.
make sure it's I would say efficient, and you do what you have to do.
Yeah. So I'm usually so I have a home office, and I'm at my desk usually by 7 to 7:30 in the morning, and I try to read all the relevant press releases and SEC filings that came out since the last market day. Um,
Okay.
so that I try to get to my desk early enough um, that I can read most of it. At least So there's like I have multiple sections of or like I have stuff that I read on like companies that I've been I own or I've done research on and I've been following, and then
Mm-hmm.
there's like the rest of the microcaps or the rest of the smaller companies out there, and I go through the stuff I own or have done research on first, and then the stuff that I don't know anything about or maybe know a little bit about, but haven't really researched those companies. So I try to get that done. Um, I try to get what's published done before the markets open. Um,
Mm-hmm.
I might not always get through the stuff on companies that I haven't followed, but I get this stuff done definitely in the companies that I've followed. Um, and then so I continue doing that during the day. And then I'm also reading various websites, listening to conference calls, on companies I own or companies that interest me. So it's mostly trying to probably do what's going to give me the biggest bang for my buck, or what's most important to know um, sooner rather than later. I prioritize things. Basically, is what I'm trying to say.
Okay, interesting, interesting. So I guess the rationale behind getting through all the relevant news before the market opens is to make sure you are acting upon the most recent information, or what's
Yes.
the
Yeah.
reasoning? Okay.
So sometimes, company may announce that, they just got a $10 million order or something, I'm just making that number up, but like some,
Yeah.
good piece of information. You might want to buy some shares, or it might be bad information. You might want to sell stuff. So, um, being time, being timely with the new information that comes out, allows you to take maximum advantage of that information.
Hmm. Okay.
So I
Got
might
it.
want to buy or something or sell something like right at the open or near the open, you know. So
Makes sense. Makes sense. That actually resonates with me because recently I had done a lot of work on this company, and it was actually not a microcap. It was like 1.8 billion market cap, which is already sizable, I would say.
yeah,
And they released their quarterly earnings, and it was really good results. And so I was able to pick up some shares on the I don't know how it's called, but it's basically pre-market, I would say.
yeah, yeah,
And the price was actually down 5% or something pre-market. I don't know why. And then it shoot up 20% when the market opened. So it was
nice,
interesting how you can, I guess, even in big companies, like 1.8 billion is not small. You can have an informational advantage and really take
right.
advantage of that information. And so I guess that's a big advantage of being full time. And yeah, I can understand the reasoning behind that. um
You're
so
bringing
that's
kind of
cool.
bring back old memories, because I'd kind of forgotten
Really?
about that. There'd be times that you know, like I would be at work and news would come out, you know, and I couldn't, I would find out at the end of the day that this news came out, and it was to my disadvantage that I couldn't take advantage of that, knowing that knowledge earlier. For the stock I
Yeah.
owned, maybe it would, this maybe it was bad news and the stock didn't went down, and I could have sold some earlier and cut some of those losses, or it's good news and I could have bought more, and the stock shot up, before I was able to take advantage of it. So yeah,
Yeah, it's funny because I was super lucky. I was actually in my lunch break from university, and I quickly went through the filings, and I also kind of leveraged ChatGPT. Obviously, I read through everything, but just make sure I didn't miss anything. I said like, make me an executive summary of this. and I read that quickly, and I saw, okay, this is exactly what I was expecting, and it's good news. And then I said I had to do a call to my friends, and I just went and bought some shares. And then I listened to the earnings call when I was in class. So I guess don't tell that to my teacher, but it was worth it. And I guess it was also fun to yeah, to have that experience, because it was the first time I really acted upon fresh information, and it's interesting to see the dynamics there. um so yeah, one question I have for you, because there has been a lot of talks and a lot of popularity of this concept called the 100 bagger, and mainly Chris Mayer talks about it,
Yeah.
and so there are a lot of people that are really on the hunt for 100 baggers. And I heard in one of your previous interviews that you did experience yourself, I don't know how many, but at least one I know of. So why don't you explain to us, how did you find it, and yeah, how was the whole experience in terms of holding it, and so on.
Well, I'll be honest. I don't remember actually having a 100 bagger. Um,
Really?
yeah. I was looking through my performance last night, and I couldn't find a stock that was a 100 bagger. But I don't remember. Maybe it's something. Maybe I wasn't smart enough to sell at the top, and I just looked at when I bought and sold. And
Okay.
now that I think about it, there might have been one that went up, a 100 bagger on like some portion of the position that I owned, but I never,
Okay. Okay.
but I never sold it. So, unfortunately, I don't have a good story to tell you there. I wish I remember what. I have a feeling I might know what company it was about, but I don't know. Perhaps if you want to go through some of my bigger winners, you might have another call on it. Have to like be better prepared for that. But I
Okay,
tend
no
I
problem.
tend to I don't tend to try to get 100 baggers. I know Chris Meyer talks about the coffee can approach to investing, right?
Yeah.
And so that's sort of the set it and forget it thing. And I don't find that. I mean, for me, I don't think that works well in microcaps because those businesses tend to be a lot more dynamic, and I think it's rare that you find a company that's always going up, going up and up for say 10 years. Um, particularly in microcaps because they maybe don't have enough of a moat to do that. And so, unfortunately, I don't have a good story to tell you.
Okay, so instead of talking about 100 baggers, why don't you um y- kind of explain to us how you generally try, what's your, I would say, principles, or what you think makes a really outstanding and outsizing return. Not going to specifics, because obviously you said you needed some more preparation on that, but what's your kind of recipes or ingredients that you feel like are needed for outstanding returns, especially in the microcap space?
Yeah. Well, first of all, let me say I tend to like scale into a position and scale out of a position.
Mm-hmm.
So, and the max I tend to put into a company at initial purchase is like 10% of my portfolio. So, and I'm not going to, if I get, I've had a certain, a fair number of like 5 or 10 baggers,
Mm-hmm.
but I'm not going to let one position, I'm going to sell part of it before it goes 10 bags because otherwise, it's going to turn into a 50% position. And at any given point in time, I don't want to have something that's, a whole lot more than 10% of my portfolio, even if it's going up. So I might, sell a portion of it. So I'm more of a, I guess, a short-term investor than or maybe you want to say trader than a long-term buy and hold, kind of person. Um,
That's quite interesting.
I think in
Yeah.
microcaps, it's really hard to find companies that have that kind of a moat that can become 100 bagger. 10 bagger is awesome.
hmm Yeah, actually, it's funny because the other day I was telling a good friend of mine that I feel like there's a lot more opportunity uh to find like 5 baggers, 10 baggers than really 100 bagger itself, and you can actually 100x your money, but not just with one idea. You can do that with
Right.
several ideas, I would say.
Yeah.
So I can understand why you say that.
Yeah.
um so like I'm trying to really get down to the key reasons why you might be buying something, and yeah, I guess you already said you try to look at profitable and companies that are growing,
Yep.
but is there more to it than just that? Like yeah, I'm trying to really understand what
Yeah. So if it's growing, I like to know why it's growing and if that's something that is something that's sustainable or not. You know,
hmm
so if a company says, comes out with the news that they grew their revenue 20%, in the last year, let's just say, you know, is there a reason behind that is something that's likely to repeat itself uh, in the next year? Sorry, the car just swerved. Um,
no worries.
and uh, so I want to understand the reasons behind any improvement in performance or in performance of the company, and whether that's something that could continue. I mean, maybe they have a great product that is really resonating with the customer, and there's a lot more room for that to grow, and that might signal that it's going to grow for the next couple of years. You know, so those are the kinds of things I look at.
Just to wrap up this theme over here of finding ideas and what you're looking for, uh, i'm I'm trying to understand also what's your kind of time frame, because you mentioned you're more short term oriented. So what are we looking at? Is it like 1 quarter, 1 year? What is it?
Well, ideally, I would buy and hold something for forever.
hmm
Um, that would be in a perfect world, but the reality is companies improve in spurts and fits, and then maybe stop improving. So
hmm
I'm basically data driven, and I'll decide how long to own it based on how the company performs.
Okay, okay, makes sense.
So
So
yeah, I
yeah, I
guess
think
another way of saying it,
uh,
sorry, is you know,
no.
it's you don't just do your due diligence once. Once you buy it, you keep doing your due diligence. As long as you hold the stock. Um,
Okay, yeah, I think that's very a really important insight, because I guess a lot of microcap investors, good microcap investors, say is that um, you not only have to do your initial due diligence, but also kind of keep doing the maintenance due diligence, and
yep,
that really helps you generate the alpha, I would say, as compared to other people.
yep,
um so yeah, that's really cool. Like, obviously microcap investing doesn't come without its ups and downs and all the
yep.
volatility. So I'm curious to know how you deal with the emotions that come along with that, and how you stay rational even when things are not going your way.
So first of all, I think you have to focus on the long term, and realize that there's going to be times when the market retreats, and um, and part of that too is like, and I think I actually did write it. I did actually write an article about this. I think of cash as a position. Um,
Okay.
so I might buy. When the market retreats, I might just buy more of stuff. That I still like if
Mhm.
the thesis hasn't changed.
Okay.
Um, so I'm also always researching stocks. So even when the market isn't doing so well, it's good to research a stock. Maybe not to buy today, but in 6 months or something like that. Um, so there's always more. I think one of the things you have to realize is that there is, as an investor, the work that you do does not necessarily produce results today or tomorrow. It might
Mm-hmm.
be a year from now, it might be a couple of years. I mean, there's been times where like I've done research on a company, didn't like it, and then all of a sudden a press release came out, and because I've done research on the company, I knew a bunch of stuff about it and was like, I'm like, oh, that position or that company, and I know X, Y, and Z about them, and that let's say they announced that their revenue was, increasing rapidly, and I had an idea of what that meant to them. And, I might buy the stock based on that news. And if I didn't have the research on it, I wouldn't have known to buy it without, going off and doing a bunch of research. So, having research on a lot of companies that I've collected over time is an advantage because it allows me to, make a more informed decision quicker because of that knowledge.
Yeah, yeah. I think that's a really powerful insight because, yeah, as you said, like if you have done previous research on something, you that enables you to act really quickly, despite also having the fundamental knowledge on the company that's needed to kind of have conviction on that. So, yeah, I feel like that's an interesting point there,
Yeah.
and. You were talking, obviously you have a lot of files on a lot of companies, and you mentioned also that you have a really good network of people that also allow you to kind of leverage your research, but I'm curious to know if you're, formally speaking, if you're a one-man show, or do you have anyone like helping you do research, or an analyst or something?
I'm essentially a one man show. But having said that, there's people I can reach out to. I might reach out to somebody that has more knowledge on the company than I do, um, and ask them a question about things. There's times where I do that, but mostly it's, work I do on my own. And
Mm,
let me
yeah.
make an exception to that. I do have friends that like I might talk with occasionally and ask them, what stocks do you like now? And then I might, I still have to do the research on it, but they'll tell me like why they, what they like and why they like it. And, that having a network of friends, um, can help point you in the right direction. Let's just say.
Okay, cool, cool. And sorry, I was just thinking. You said cash is a position before, and that just stuck with me for a while when I was talking to you. So why do you think cash is a position? And there are a lot of people that say like you should be 100% invested because cash is a drag on you and stuff. So what's your argument for that? And how you do how you translate that into practice, I would say. So do you always keep
Yeah.
certain amount in cash of your
I,
portfolio,
I
or
don't
like?
have, so what I tend to do is I only invest in a company when I'm, so generally I'm looking for companies that I think can like double rather quickly. I don't like to invest in, I like to see uh, a nice upside and potential upside, because I'm going to be wrong some amount, and it gives me kind of more of a margin of safety, to know that, like, well, this company probably will double in like 2 years based on what I know, but so if I'm wrong and they only grow up by 50%, I'm fine.
Yeah. So as you may see, Mike is on the road, so we are having some technical issues, but I guess we are all set now. And just to really wrap up the interview, I want to ask you, what's your advice for young people that are passionate about investing and probably don't have an investing background, but really want to pivot into the investing industry and do this full time? So yeah, what's your take and what's your advice for that?
Well, first of all, I would recommend that anybody that wants to get involved in investing have some sort of background in accounting. You don't need like years of accounting experience, but having, like one basic accounting class, or and my dad was a CPA, so there's some of this I learned from osmosis. Um, but there was also a book I read. I don't remember the exact title, but it was something about a lemonade, accounting for a lemonade stand.
Okay.
So it was really basic. Um, and I wish I had the title out of that off the top of my head, but I don't. Um, but I would suggest, and we could figure out the name of that book later.
Yeah,
Um,
sure.
and I would recommend that anybody that wants to be an investor get some basic accounting, whether they're taking a class at college or in high school, or just reading a book. That would be like one thing I would start with. And
Nice.
I think one of the other things, well, this you get like with life experience and just and investing experiences. Like, one of the things that I think is helpful is sort of being able to read between the lines. So if a
Okay.
company said some, XYZ in a press release, um, sometimes how they say it, and like, let's say earnings were, or revenue was up this quarter, was that, what often is more important is not that revenue was up, but why it was up. And is that something
Mhm.
that's like, going to continue? Like, is revenue going to keep increasing, or is it just that, they had one customer that had, you know, an unusual large order, and it was a one-time thing in nature? That's
Okay.
important to, understand when you're reading these press releases, like kind of what kind of insight you're getting from it, and so I think also, I don't know if this would help anybody necessarily to be better, but maybe something to realize that, a lot of this is about like becoming a better investor is about how many repetitions you do, and just like reading a lot of, press releases or information about companies, and studying this company did this and then this happened, and sort of studying companies and learning, you're going to learn what works, what doesn't, like maybe when to, what CEO is like telling you a story versus one that's you know so trying to get insight into whether what they're telling you is like, whether they're blowing smoke, or whether they're, there's something real there.
Yeah, I think that's really really helpful. And as you said, reading between the lines, it's something I want to improve upon because you can kind of get some informational advantage there too, by doing that. um, yeah, so I think this was a really interesting conversation, to say the least.
Yeah, I enjoyed it.
And I think we can wrap up here. Just before really saying bye, I would like to ask you where people can find more about you, and yeah, just probably, I don't know, get in touch or something.
So I'm available on, I'm on MicroCap Club a lot. Um,
Hmm.
I'm also on LinkedIn. I'm at MikeDDKing. Um, and those are probably the two best ways to get a hold of me.
Nice, perfect. So yeah, I think that's a wrap, and thank you so much for being so generous with your time, and I hope everyone enjoyed this conversation.
It was enjoyable for me too. Thank you, David.